Well, I would just say don't get caught up in predictions. That's why I wrote my thing yesterday, right? So nobody knows what's going to happen this year. We don't know. But there is a lot of excellent risk versus reward stocks out there still. Most of the rally, the big rally in December, was the big stocks, especially the big iron ore stocks. So those mid-tier ones and the smaller, even to the microcap level, there's heaps of opportunities. So don't be dissuaded from thinking that you've missed anything. That's for sure. And get amongst it. I mean, I was begging people last year to buy up what they could.
Hello and welcome back to a second season of What's Not Priced In. Wish everyone a happy new year. Obviously, new year, new season, but same old market, same old me. Although we do have a new guest. Greg obviously isn't here today. He will join us later next week. But we are rejoined by the estimable Callum Newman. Callum, welcome back to the show. What's the show called again?
What's Not Priced In, Kiryll?
Now, famously, last time we had you on the show was late November last year. And you famously said that you don't give a toss about the equity risk premium. And I think quite a lot of viewers liked your honesty.
Yes.
And you're straight talking. So we'll have you join us here today and talk about small caps and your outlook for the year ahead.
Okay.
Well, obviously it's the start of the new year. So I thought maybe we could ask you how you thought 2023 went and just maybe give your brief thoughts on the year that was and how was it for you? Were you surprised by 2023? Was it something you expected it, or did it take you through the ringer? Did you come out unscathed?
Not unscathed. It was a bizarre year. It's hard to describe, but 85% of it was just
Nothing.
A drag, a real drag, because it was really tight and difficult. I remember market went down in March, and you might remember I sent you that document actually, all the reasons why the markets should go up, et cetera, et cetera. Lo and behold, US NASDAQ up 40%, the S&P, rips up 25% in the end. But the Aussie market just couldn't kick into gear. And the time we did the last podcast, we were like, oh man, is this ever going to end? Like this is so tedious kind of thing. And in December, of course, we got a big rally and it sort of saved the Aussie market a little bit. Having said that, if you go back and look at the record of Australian small cap investigator and small cap systems, so I'm the small cap sector only with those services. What was a difficult year for small caps? We actually came through pretty good. You'd be pretty happy, generally speaking. I mean, obviously you have to ask the subscribers, of course, but we got quite a good result for both of them. So I was happy with that. But behind the scenes, it was a lot of like, oh my God, is this ever going to get any better kind of thing? So on the whole, when I look back, I'm happy with how it all went.
Well, I think off air, just before we started the broadcast, you did want me to mention that when you joined the show in late November, you did sort of say that you were positive and
Absolutely.
things are looking up. And then in December, obviously, the Aussie market responded, and you made a good call there. So congrats.
Well, I mean, you can get lucky sometimes in the sense, well, I knew there was value there, and I knew there was lots of opportunities. I just didn't know when it was going to happen. But ironically enough, I remember I gave an article to the guys just previous to all that when I said, look, back in 2018, there was this stock called Credible, right? And I really liked it. And it was just grinding along. And I said the story. I said, for ages, I couldn't work out why no one else would go for it. And then suddenly, bang, one day it just ripped up, and eventually Rupert Murdoch took it over. And there's been a bunch of stories like that in December. Like suddenly it's like flicking a switch or something. And I think what happened was a lot of fund managers were holding back, and they weren't sure whether the market would dump again, and things got a bit hairy there by October, November period. But as soon as they saw the market running, they had to get on board. So happy days are here again.
Well, maybe I'll also ask you for a reflection. Me personally, one reflection that I had in 2023, I think I've diagnosed in myself and maybe I'm developing apathy to macroeconomic questions. I think I started this podcast with earlier last year, talking a lot about macroeconomic developments. I was, scouring Reserve Bank statements and interviews and what's happening in the Fed. And I think this year, last year maybe it showed me that it doesn't really matter that much, especially if you are an investor that focuses on individual businesses. So at the end of the day, if all you care about is finding businesses that will be here in 5 years, 10 years time, and you want them to be, growing earnings, it doesn't really matter if what the yield curve is doing or what the interest rate path is. So I think maybe my big reflection for last year was macroeconomic stuff doesn't really matter that much.
Well, I would say they do matter in one sense, but it's like, how do you trade that stuff kind of thing, right? So if you're trying to make a buck, it's just usually ends up too hard. So
what was your big reflection on 2023?
I don't know that I have a big reflection other than to say I felt that we were in a difficult environment, but we would get through it. And you had to sort of take the long view. I mean, a bit like what you're saying. If you were prepared to look 2 to 3 years out, you'd sort of go, well, there's screaming bargains here. You've just got to go with it, kind of thing. The hard part is by that stage, everybody's sort of thrown in the towel a little bit. So because this has gone on for a long time, it had been 2 years where it has just been grinding along. But we're now at least looking a little bit more positive and things are starting to shift again. So I think we're going back to a bit more, inverted commas, normal type market. And we see what throws up 2024, but it's never going to be a straight line, right? Or easy kind of thing. So we'll see.
Well, you famously were described as Mr. Positive by Greg, and I think maybe as the year unfolds this year, your positivity will be rewarded. And, well, we've talked about 2023. I think now we'll obviously turn to 2024. Maybe just generally before we get into any specific stocks or trends, what's your outlook for 2024? Are you more positive about this year than last year?
Yes. In terms of the Aussie market, yes, because I think the shackles sort of come off the Aussie market a little bit more. I take a positive approach all the time because you go, even if you put it like this, even if the fundamentals are there for the stock market to go up. Presuming we don't know what wildcards are going to happen or how it'll all play out, but it could be volatile kind of thing. Obviously, we talked about interest rates and their effect. So that's obviously going to keep bullying and pushing on things. So it does depend a little bit on, are you investing, trying to trade momentum, short term, long term, what have you. So, but overall, by the end of, if we sit here 2025, I'd expect the market to be up. Yeah.
Okay. Well, now we'll turn to a recent article you wrote, I think it was in December of last year, where you sort of outlined some 7 predictions. Obviously, you stuck your neck out and you admitted it. You did sort of quote Ken Fisher, who said the stock market is the great humiliator, and hopefully that won't be proven true in your case. But so you mentioned 7 predictions, but I'll focus maybe on 3 or 4 and just get your thoughts on it. I think the one interesting one, and I talked about macroeconomics, and this one relates to that. You said that the Fed, in your view, might actually cut earlier than the market thinks. And do you still hold that view today? Because I think in recent weeks, the market has sort of shifted its bets and does think that given where inflation is at the moment, it's proving a bit stickier. I think they're unwinding their bets that central banks will cut earlier. But
it's funny you mentioned the yield curve before, because that idea sprang from the notion that they were going to try and get it positive again to help the banking sector again. Look, that was a prediction that might happen. Again, it's a tricky one to try and monetize or see what happens. But the bond market, it's been shifting a lot. 1 minute they go, oh no, we're going to cut here, no, we're going to push it out, kind of thing. So it's very data dependent and all that type of thing. But I do think the Fed is going to try and manipulate things to get the yield curve positive. So I would assume that means they have to cut. But we'll see what happens. It's one you sort of got to just watch that one.
Yeah, watch the space. And just as a related question, as a small caps guy, as a small caps investor, how much should those type of investors care what the Fed is doing? Will it matter a lot for the small cap sector if the Fed does come out and cut earlier than expected? Will that sort of put a
I
fire
think it
under
would actually, because remember the small caps have been down in the dumps
Yep.
for a while, and that hasn't really been driven by the companies themselves. Oddly enough, it has been a very macro-driven market, and the pressure on the small cap sector has come from the higher rates and that type of thing. So if the Fed was to cut, it would be like, risk on is back, and small caps love that sort of thing. But again, that's a broad brushstroke.
Yeah.
You've still got to find the companies that are doing good things and the market wants to chase kind of thing. But it would help take the shackles off a bit, because it's still, it's hard to describe. But if you're around in 2021 when the small cap sector was going absolutely bananas, it's not like that now. It's just sort of warming up a little bit. So, I mean, I take that as a positive, because it tells me there's months to run.
Yeah. And I think we were sort of talking about it off camera. I think this year there's just going to be a lot of opportunities, because obviously we've come from 2023 and nothing really happened, and small caps are a bit depressed. So this is really the year for a good, savvy small cap stock picker to pick out individuals, small caps. So we'll move on to.
And I should just point out, by the way, that the whole thing doesn't end in 2025, right? So if you're buying for 2 or 3 years ahead, right, you're trying to build for the uplift ahead.
Yep. And I think we'll move on to the next one, which was that you made the prediction that Aussie stocks will hit an all-time high.
Yes, that actually wasn't very brave, because by the time I wrote that, or when I wrote it, they were a bit further away than by the time I went out. But absolutely, I do think they will smash through fairly soon.
Yep. And well, you're obviously a small caps expert. Do you think small caps will outperform the bigger stocks, the big fish in town?
I do actually, because the top 50 as such has already rallied so hard.
Yeah. And iron ore stocks as well, especially.
Yes, absolutely. So I don't 100% sure that they can keep out-muscling the smaller ones. So I would lean towards the small stocks,
Yeah, I think Greg always likes to mention, you have to look at the risk-reward ratio and how much upside there is and how much downside. I'm guessing with the biggest stocks in town, there's already quite a lot of upside priced in versus the small cap. So comparatively, the small caps look attractive there. Interestingly, you also mentioned Bitcoin and gold in your prediction, and obviously we're recording it today on a Thursday, and that's the day that the US SEC finally approved Bitcoin ETFs. And you did say that Bitcoin and gold might attack all-time highs, and given that the SEC approved the ETFs, that might prove true.
True. I mean, I do wonder how much of that ETF is priced in. I mean, Bitcoin's had a big rally up, but overall, the gold and Bitcoin are related, right? So if liquidity is increasing, as it looks like it is, then I would assume those markets are going to keep soaking up some of the extra credit and what have you. Again, gold's not that far away anyway, but and Greg did some good research on why it could keep rolling up. Having said that, the Aussie gold stocks are a bit lackluster at the moment, so the market's not confirming that yet. Bitcoin's looking pretty good. So I do wonder, though, Bitcoin, it's like if you look at the chart, it's been a pretty smooth ride up, actually, right? So I do wonder if it'll get a bit more volatile at some point, but I'm riding along for the moment, happily.
Yeah. Well, yeah, I was actually going to ask you some questions about Bitcoin. Do you follow it quite a lot? Is it something that's in your portfolio, just sort of on your watch list?
No, I got it in my super fund and thereabouts. So I must admit, last year, also even previous to that, I just started buying it when it was down in the dumps on the assumption that it would have another upcycle run. But I didn't make any attempt to time it, and oddly enough, I thought, you know what, I'm not even going to follow it. I just decided what I was going to put into it, and I did. And oddly enough, it's worked out well in hindsight. So yeah, definitely have an allocation to Bitcoin, and going to hold it indefinitely for the moment. Yeah.
Well, I think some investors may have a question about the ETF because it's obviously been a big deal in the media, but I guess the question is how much does that really influence the Bitcoin price? Obviously, it was largely expected that the ETFs will be approved. So the question is how much of it is already reflected in the price? And then the other question is obviously long-term or near-term, how much does the existence of these ETFs and the institutional support, how much of that will affect the price long-term? Or is it immaterial?
I mean, we'll have to see. I mean, no, it definitely does help validate it. I mean, I've got a mate who's older. He's turned 60 this week, in fact. And he's still like, oh, wow, it's great for Russian terrorists and all this sort of stuff. So anything that can facilitate more money to flow into the market, I think is a good thing. Yeah.
And obviously, I think for years, people like your friend have maybe characterized Bitcoin as a fringe asset. So maybe now that BlackRock is involved in other ETF providers, it gives it a bit of credibility in the mainstream. And so we'll see what that does to the price. Well, I think we've mentioned small caps before, but you also said that REITs, retail, real estate investment trusts, will also overperform in 2024. What do you think of that?
Yeah. So again, just been bashed up for 2 years, absolutely flogged, but fundamentally, a lot of them are actually going okay.
Yep.
Like when I say that, they're rising rents and they've got a higher cost of debt, etc. But that's what I believe is priced into them now. And you have this disconnect where the REITs are saying, well, our assets are worth this, and the market's saying it's worth that, so kind of thing. I think that'll close up. If we get rate cuts, that'll take some of the pressure off their debt costs, etc. And I have a strong feeling a lot of the fund managers will be digging around there looking for value and that type of thing. And they've started to move up since because they got driven down into around that October low. They've started to rally up. And a long time ago, I went over a whole bunch of REIT stuff, and people, they're always pasted as like these bond proxies, right? It's like, why would you get this when you can get this from a bond kind of thing? But it's not true, because they're not inactive. They do refurbish their things. They buy and sell. They do all sorts of things. So it kind of depends what they're up to. But like Scentre Group, for example, Vicinity, some of the retail ones are still below their highs from pre-COVID, right?
Yep.
So, and yet they've got more people going through there than they ever have. And so there's actually good upside in some of those. But again, they're slow burning kind of dividend
more of a
paying
contrarian type of play.
Well, I mean, you could call it, I was thinking more like, if you're out for a fast buck, you're not going to, get a quick ride on, Vicinity centres.
It's not really a sexy sector like AI.
No, but if you've got a reasonable big portfolio and you want stability and cash flow, well, they're still looking pretty good to me.
Yeah, and I think Greg has also been talking about REITs quite a lot as well in the last few months as something that's undervalued. But we've I just mentioned contrarian stocks, and I wanted maybe to get your views on some stocks that were really bad losers last year that you may think can come back in this year. So I think I wrote about this in December. So here were the worst performing stocks of 2023. And I just maybe wanted to get your thoughts whether you think those stocks can rebound or whether they'll just
Okay, if I know about them, yeah.
All right. I think you'll probably know most of these ones.
They're not mine, are they?
We'll cut it out. All right, so the worst performing one was Lake Resources. It was down 82%.
Lithium developer.
Yep, lithium features pretty prominently in this list. Then we've got 29 Metals. BrainChip was the third worst performer. Then we've got Graphite, Syra Resources. Then we've got Chalice Mining, Star Entertainment, Core Lithium, Bound Coke and Coal, Mesoblast, and Sayona Mining.
Well, as you alluded to there, they're all sort of specky miners as such. It was a terrible year for those kind of stocks last year. And in fact, one of the best things I ever did was largely avoid those, except for one that took me. I got burnt on one as well. I don't know that I know enough to be confident that they'll all come back. So, but a broad brush of that is like, is lithium going to come back kind of thing? I would say yes. So that would be a sector. Well, I am watching it.
So you are watching the lithium sector for value to sort of go back up?
I don't know if it's going to happen anytime soon, actually. But if we get to, say, the middle of the year and they're sort of starting to base out, one thing, if you can't, well, you asked about what did I learn from 2023, you could sort of say, like, that's the kind of sector where you watch and wait for it to go sideways, and then you see if they're being accumulated and if there's something to start breaking them out, kind of thing. BrainChip, It's funny you mention it. I remember looking at that a few years ago, actually, and all I saw was this hazy tech has swallowed gargantuan amounts of capital without ever reducing revenue. And then it had a big rally or whatever, I think, which was in the boom of 21, which you could pretty much throw a dart and everything was going. So I'm not surprised that one's gone down again. Whether it can come back, I have no idea, but I wouldn't be confident to have a lash at it right now.
Yeah, and it was interesting because I think they were, especially in recent years, really talking up the AI adjacent technology, edge AI technology. And it's interesting because the market hasn't really responded.
Well, it may eventually. I mean, I don't want to be totally dismissed because I just don't know enough about it. But it's, as far as I know, again, over the last few years, any company that doesn't make money has generally struggled. So it's still a little bit like that. So I tend to steer towards the ones with cash flow at the moment. That real specky stuff that just flies up on stories and themes, and it's not really happening.
Yeah. And what about Star Entertainment?
I don't know enough about it, but that's the casino, right? That are in trouble kind of thing.
Yeah, lots of scandals, lots of license issues.
I mean, eventually, if they hold their license, you would assume it'd come good. But that's very much a value kind of proposition. I don't know. I generally don't get caught up, and it's way down off its all-time highs. And generally, I'd go with something a bit more exciting than that one.
Well, speaking of your exciting stocks, I think you did mention that one stock that you're sort of looking at on your watch list is a non-bank lender, and you're just sort of looking at it as to non-bank lenders as a whole to maybe rebound in 2024. But you've identified Resimac in particular. So
that's a recommendation from Australian Small-Cap Investigator. Absolutely, I should put a caveat on that I did a presentation to you guys with a similar idea last year. And the assumption behind those was, again, that they'd been hammered in the previous year, but property, I made the pitch early last year that property would surprise everyone with its resilience, right? And I thought that would help them recover, and it didn't. But the reason, or one of the reasons, was that the big banks were pinching their customers because they have this preferential funding from the RBA, which is now within 6 months of rolling off. But also over last year, car sales held very strong. So a lot of those non-banks have an angle into that as well. So I just see them as in the case of Resimac and Pepper Money, Liberty, they're very established businesses, very profitable. And I feel that if you're prepared to be patient and wait, it may not, definitely didn't happen last year, but it may happen in the next 2 years that you can bank a dividend and get a good look, because property is going up again. Investors are drawn to it because of the rents. Credit's still positive. They still have a niche of people who aren't regular bank borrowers, what they call non-prime. So I do think it's a good proposition adjusted for risk and all that type of thing. But again, they don't have a lot of liquidity. And as a general rule of thumb, most Aussie investors don't seem to be attracted to that sector. It's never really. I did in 2021 a little bit, but we'd probably have to see property really heat up for them to sort of go into a big specky run. But as fundamental, strong businesses, I like them. Yeah.
Well, why do you think the Aussie investors aren't really interested in those particular stocks?
Oh, why would you buy a real business when you can speculate on lithium? I mean,
well, look what happened
why
to
do people
those
do
who
anything?
speculated on lithium. Yeah.
I don't know. It's just one of those things where, I mean, the market drives you nuts sometimes because you're like, again, like with BrainChip, there you go. Doesn't make any money, but it went on that massive rally, and then you get a stock like Resimac that banked probably 50 million and went down. That's the way it works sometimes. So I know. I just don't think because it's just probably a bit obscure, basically.
Yeah, and I think maybe they're also on the smaller end of town, and people who care about the small caps, they're sort of looking for big growers who can just maybe grow their earnings like 10x. And that's probably why people chose in the fintech space more of the buy now, pay later all these years ago. And it worked for a while, and then it didn't. Yeah.
So, I mean, I do, again, with a bias towards cash flow. I mean, as I say, they're profitable businesses. So, and they're on like 5 or 6 times earnings. So it's not a big risk in my view.
Yeah. So are you looking for, is there a catalyst that you would think would send Resimac higher, or some re-rating event, or just more of a slow emergence of value?
See how they go at their half-year report. In terms of one thing holding them back now is their revenue growth is not there, right? Because they're losing to the big banks, so they need to start winning business back. So we'll need to see that go, and then that funding rolls off for the banks. So that just makes the non-banks a little bit more competitive than they were. And then if we see property and credit growth maybe lift a little bit, well, then it starts to give them better prospects, kind of thing. So we just have to see. So again, if you're looking for the fast buck, I don't know if it's going to happen, but if you're prepared to wait 12 to 24 months, it could be really interesting.
Yeah. Now, I have to ask you this question because it's obviously, it dominated 2023. It will probably dominate 2024, and I'm talking about AI. Obviously, even for stocks like Resimac, they're probably adopting AI technologies. All of that loan and lending.
Sure they are.
And I think I asked you this last year as well, but are you making AI a big focus for your research in 2024? Do you think maybe it's now? Do you think the AI trade will work in 2024 as well as it did last year?
Well, it worked in America. I don't know that you could say it really worked here as such. I guess with the data centers it did a little bit, but it's hard to get a direct lock on it here in Australia. I mean, you do. I mean, one thing we were joshing about lithium before, you do have to be aware about what's on people's minds. So if people think AI is a thing, then they'll probably chase it in some way or another. So now that can be a trap because companies then start playing to that and they're like, oh, we're AI this, and you go, oh really? But no, I mean, I know Kogan, for example, came out and said, look, some of their stuff, they're using AI for customer service and maybe
Temple and Webster did the same thing as well.
Inventory management and all that type of thing. So those are legitimate business use cases, right? So, but the question is like, okay, how much does it really affect their bottom line and margins and all that sort of stuff? Now, oddly enough, we did do an AI issue for Small Cap Investigator, and I gave them 3 ideas. They were aggressive, and I put the caveat on them that, you know, I was hunting this idea that AI would catch the eye of the herd, right? And 2 of them didn't really work, but one is working, and it's called Nuix, and that's doubled now. But that is probably one of the most direct ways to play AI in Australia because its whole business is data and analysing it and using it to make predictions kind of thing. So that one's still looking interesting, but I'll put a caveat on it. It's got legal issues, and thus far the market is going with that. But again, last year when we did that, it again had been hammered to the floor. So there's just a lot of stocks out there that have been through very tough times, and you almost got to say, well, it can't get any worse. And then they can rise again. So so I'm starting to dig around with the different companies that have some relation to AI. So it will be a focus this year. Yeah, absolutely.
Yeah, I think the big thing, the big uncertainty is, I think you have alluded to as well, the benefits of AI are a bit diffuse. You're not really sure who will benefit or how. For example, companies can sort of adopt AI capabilities in some like customer service, but you're not exactly sure how much will that affect the bottom line and how material is it going to raise return on equity 2%, 1%, 0.5%. It's unclear at this stage.
Well, let me give you another example of that, right? I just wrote about this. It's about the nickel market, which might sound surprising, but everyone talked about nickel in relation to batteries, right? And electric cars and all that. Yeah. But 98, or I'm pretty sure it's 98% of demand for nickel is from stainless steel. So it's all very well to go on how exciting it is, but that was 2% of the nickel market. What about the other 98%? So you do have to say, how big is this factor in this particular thing? So, but we just have to see.
Yeah, and I think that will be, I think that's going to be one of the most interesting things for me personally is obviously a lot of people think AI is the next big thing, and in a lot of ways it is. But it'll be interesting to see what businesses adopt it and how much it actually impacts their bottom line. And I think maybe another thing I wanted to ask is, you know, how should investors even approach the AI space? Because you and I don't have computer science degrees. We're, I guess, novices in that sense. So
absolutely,
for us, it's hard to sort of understand all of the intricacies of AI and how companies are going to use it and what the technology is.
Well, I think it's hard for everybody, but at least with the US one, you had like Tesla would go, okay, we have all this data and we're going to start running the algos to, you know, make the cars better. And you go, well, yeah, I get that. I go along with that. Again, the problem in Australia, it's not clear yet what companies
Yeah.
really have a strong lock on how this is going to make their business better.
Yeah, I think we've maybe got that big data center company.
Yeah, you got
next
like
to
the hardware plays, like the semiconductor thing. So Weebit Nano, theoretically could be an idea around that. But again, the market's not going with it for the moment.
Yeah. And I think that for Australian investors, that may be a bit of a limiting factor, because in America, a lot of stocks are in the AI space. Obviously, they've got the mega cap stocks that they can invest in as well. In Australia,
Yeah, because it all costs a fortune too, by the way. All the
yeah, exactly. In Australia, it's quite limited. So, unfortunately, if you
and we should just say, like, that's a thematic, and that's great. But don't forget that sometime, again, last year, something as dull and as boring as in December, if you were on Fortescue Metals, you got a ripping ride. So as exciting as AI sounds, you can get a great stock return from something as dull as iron ore.
Yeah. And I think there was a famous book by Edward Chancellor. He said capital returns, and he sort of said it's harder to make money where in sectors where all of the capital flows, and you sort of have to focus on where the capital isn't in at the moment. And I think with AI, everyone is thinking of AI. All of the news articles are about AI. Venture capital is probably turning their eye to AI. So there's a lot of money there. It's very competitive. It's harder maybe to eke out alpha, as the term goes.
But I mean, you alluded to Resimac before. Now, a bank, or a mortgage lender, or a bank, the banks will be doing it, right?
Yep.
Their job is to work out their credit risk, right? So algorithms, artificial intelligence can help with that. So that to me is a logical kind of thing. So maybe they can sack a bunch of more people and it goes to the bottom line.
Yep. And I think your colleague Murray Dawes, he wrote yesterday about this very thing, that he sort of said, he wrote that one of his friends got let go, and the friend does think that it was because of AI, and sort of Murray mused that, what will happen if
productivity, efficiency, higher profits. Yeah. Again, this is why you got to be positive. Like there are good things happening out there, and I mean, people can focus on the negative of the lost job, right? But it should make companies more productive. Mining companies, analyzing their results and all that stuff, or where they drill and all this kind of thing. So it is exciting,
yeah. And I think that's a big part of it is AI will make predictions cheaper and easier and more abundant, and that's a big book that I lent from you, and I gave it to you today, and
yes.
It's called Prediction
Give
Machines.
Book back.
Prediction Machines, for anyone who wants to read it. I think it's making the point that with AI, predictions are going to become much more cheaper, and that's going to actually have transformative effects for maybe mining or banking. So that's something to keep in mind. But enough talking from me. I think you've sort of wanted to share maybe 5 interesting small cap ideas for the readers for 2024.
Sorry. Every month with the Australian Small Cap Investigator, I do a top 5 to buy, because we have a list of stocks, right? And it just helps narrow them down a little bit. And so if I see something that's coming up pretty good. So do you really want me to give all 5? Well, special treat on the show today.
Right, so let's start with 3.
I don't mind. So we did one last time. So MGX was the Mount Gibson one. I still like that one. It didn't really rally. So the big rally in the big iron ore miners took up BHP, Rio, Fortescue very well. The smaller ones that produced didn't quite fire, which MGX is one of them, in the same way. It was making a lot of money. So again, there's a risk because it's a single operation, but when they come out with their next set of results, I'd expect their cash balance to be up a lot. So it'll be interesting to see. That still looks good, adjusted for risk, on the assumption iron ore holds up. But at the moment, it's still 130 something. That's very good margins. That was one. Resimac, which I like. So again, you got to be patient. But there's been to describe the situation, November last year, Resimac was grinding along at like 80 cents with very few shares traded every day. There's been a bit of volume come into it, and I think you're getting a look there at a very cheap business that has good upside, but it doesn't. It's not going to take off tomorrow, I don't think. But by February we'll know its half-year results, and we'll see what the market thinks of that. The risk, of course, if something the market doesn't like with those low liquid stocks, they can go against you badly. Parenti is a mining service company that I like. They've got, unfortunately, caught up a little bit in the recent issues around a mining company called Panoramic. But I don't think short term they've lost a contract kind of thing. But the outlook for mining is really bullish, and I expect that sector to do well. So again, that's a bit bigger stock, but a sturdy kind of beast, but looking good for the next couple of years. One exciting specky is I'm trying to think of my other one. I forgot the name's dropped out. What was my other one?
Avita.
God, how did you? I was just telling you about the announcement thing. Sorry, it's just in the spotlight. Yeah. Avita came out with a really good announcement this morning. It's up 12% today. So, primarily US based, and they're busting into the US healthcare system, but its revenue growth is very high. So, it's speculative, but because they're not profitable yet, but they've got a big growth market ahead of them, and if they can monetize it, it could be a real flyer. So healthcare, that one again sort of had a bit of a rally early in the year, sort of sold down. They slightly shifted the goalposts on us, but when I saw that, I sort of said to go, "Oh yeah," I said why they should jump on it, and thus far it's worked. So it's on the move. So interesting one to follow. And
Cedar Woods.
It came to me. I didn't mean that from. Last year, Perth property did particularly well, and it's particularly bullish over there. The rents are very good. The basic case is A, it's cheaper over there, and B, they're all making so much money with all the mining going on and all the profits flowing through there. So Perth is doing really well. Now, I followed Cedar Woods Properties, which is a developer, for a long time. I think this is the third time I've recommended it, actually, and it hasn't let me down yet. But I know for a fact that they were buying WA land in 2019, which at the time WA was in the dumps and had been for ages. So anyway, they've locked up heaps of land in WA. They have a presence in Queensland and Victoria as well. Big order book, again, bashed up in the last few years, but a very quality company. Think of the immigration pressuring the real estate. They'll be able to sell into that for the next couple of years. So again, a bit more of a conservative idea, but again, if you're happy to just tuck it away, bank the dividend a couple of years, I think you're going to be happy. So a lot of the ones I've given you there, I've done that because, sorry, I was just trying to how to phrase it. I think I told you this last time. I like to look down before I look up, right? So I like to have companies that are solid or bashed up enough that I don't think they're going to rip out.
So you don't start from, for example, thematics or sectors or industries?
Well, I can, but I don't want to get ripped out.
Yep.
I don't want to have the floor ripped out for me because small caps can be very volatile, and when it goes wrong, it goes very wrong. Now, that can be fine if you position size for that and you go, well, I've just smoked 80%, but that's okay because it was only 1% of my portfolio. But generally speaking, it's less stressful, and because remember, human psychology, we don't like losing money, and we like it,
and we like making money.
Well, yeah, but we hate losing money more than we like making money, all that type of stuff. So anyway, those ones I think those 5 ideas have very, very solid fundamentals, and now it's just a case: do they execute? Does the market go with it? And how far can they run if they do run?
And for 2024, you've mentioned that you sort of like to look down before you look up. So in the stocks that you're researching at the moment, are you researching them based on stock screeners or business fundamentals? Or are you also maybe screening for certain industry events or industry outlook?
No, I mean, there's what's the thing with the mouse and the thing? So the mouse and the ball of string, like he wants to play with it even though he kind of shouldn't or whatever. So mining juniors are interesting because they have all been hammered, but as I said before, when they go wrong, they really go wrong. Lithium is one, so I'm watching. So again, with that one, you go, okay, well, I mean, on a personal level, I follow Pilbara Minerals, right? Because it's like, okay, that's the flagship, the mothership, if you like. So if that's going to base out, it's very cash generative when things are going well. So, but that's out of my sector, right? So it's like, okay, well, I probably need to see the bigger stocks lead the smaller ones up. So that's chewing away in the background. AI related stuff, yes. Retail is interesting because again, it's been smashed up, but I just don't know whether they'll be exciting enough for for the subscribers, because it might be a solid buy if you're a value kind of guy. But I just don't know if the growth will be big enough.
Although there are some stocks in that retail sector that did capture investors' imagination. I think Satire was one. Levi's was another. I think
Levi's is a bit big now. I think,
yeah. But I think with Satire, it was always a stock that would go on wild runs.
Yeah, it did have another wild run. Yeah, I mean, and Temple & Webster had another big one. So you can make a buck out of retail. Yeah, absolutely. Anyway, these are things just rattling around in my brain. The REIT sector, there isn't a heap of small stuff there, but we do have 1-2 REITs on the one active buy on a REIT. So again, it depends what level of risk and etc. People want. But no, I just follow a lot of different names and try to get a sense of where they're at and sort of dig into them from there.
Well, I think obviously since it's the new year, we're all in a ruminative mood. We sort of reflect, think ahead, make goals. Did you wake up on New Year's Day feeling positive about the year ahead, or were you?
Well, I'm Mr. Positive, of course.
So your positivity hasn't waned and it's also only increased.
No, I'm very positive. And remember, context, the last 2 years have been pretty grindy. As again, the results have been fine, but the overall day-to-day was a bit grindy. But you can definitely see things starting to improve. And as I say, the market's not even that far off its all-time highs. How bad can it be, right? And I think there's going to be lots of opportunity. But it's just a matter of following things. And we haven't even talked about 2S, mate. And my little one in Singapore, that
was your best performance stock of 2023.
Yeah. So
talking about it.
For all the stuff I've just said about how difficult last year was, that stock is now up 160%. And that we got on that in March. And there's no reason it can't keep growing. So that's what I say. And again, with your macro issues, like you can waffle on about the Fed and I can go on about the yield curve, but if you own 2S, you don't care. You're loving life. So we just got to find more businesses like that.
It's as easy as that. Yeah. Well, I think with that we'll end the episode there. But it was great having you on again, Mr. Positivity. I feel more positive now having spoken to you, and obviously I hope the viewers do too. So maybe do you have any final words, any final positive remarks for investors going into 2024?
Well, I would just say don't get caught up in predictions. That's why I wrote my thing yesterday, right? So nobody knows what's going to happen this year. We don't know. But there is a lot of excellent risk versus reward stocks out there still. Most of the rally, the big rally in December, was the big stocks, especially the big iron ore stocks. So those mid-tier ones and the smaller, even to the microcap level, there's heaps of opportunities. So don't be dissuaded from thinking that you've missed anything. That's for sure. And get amongst it. I mean, I was begging people last year to buy up what they could. That speech that we did with the fat tail thing, we went and looked at the results. I gave 6 stocks that night. A month or two later, they were up 25% each. So there's heaps of opportunity, and none of those stocks were particularly aggressive. In fact, GQG is still going up. Like, it's all this value lying around on the floor. So get amongst it. What can I say?
Well, there you go. Get amongst it. Be positive. There's lots of opportunities. Don't get despondent. Stuff the equity risk premium, macroeconomic fluff, and just get amongst it.
Absolutely.
Get revved up.
Absolutely. I mean, everyone's always. I mean, we have our compliance. They qualify everything, of course, but past performance is no guarantee of future performance. But I mean, if there's one thing I've learned, there's always opportunity, and then it's just a question of, are you prepared to be patient, or you want to trade momentum, or what do you want to do? But and with small cap systems, the algorithm is picking up more momentum across the board. So generally speaking, things are positive.
And yet, just briefly, obviously, if people do want to hear more about your services, you've got obviously the Australian Small Caps Investigator, and then you've got the Small Cap Systems, and maybe just give a brief what's the distinction between the two services.
So Australian Small Cap Investigator, I'm looking at the companies fundamentally, and I make sure that they've got cash on the balance sheet, what they're doing, and generally I guide a 18-month to 2-year, even indefinite in a way. It's an investment. You buy this, you're not trying to time it in the terms of like Murray Dawes with his technical analysis and all that sort of stuff. Saying this is fundamentally an opportunity, put it in your account, or find out in 2 years whether I was right or not, kind of thing. And again, generally I've given them established cash flowing businesses, generally speaking, but there's been a few speckies along the way. And they've done some of those ones, on the whole, it's done well, even in a tough market for small caps. Small cap systems is different, where we have an algorithm that scans the market for momentum, for stocks that are moving now. So we're less concerned with fundamentally, its balance sheet and all that sort of stuff, and its outlook, and just to say, look, this is moving now. Doesn't make sense. Yes, we have an idea of course what it does, but not to the same depth as the other one. We can do more buys. So generally with Australian, I do one recommendation with the issue per month. So small cap system, we have no restrictions. So I did 4 on Tuesday when that one went out. And we write it up for as long as the momentum is there, and when it goes away, we get rid of it. So that one's a trading service. And again, in a difficult market, the guys, if they took all the trades, made money. They good money too. Like in the end, I think we did the results just before December. I think it was like 20% up across the thing. And by December, it's got better. And some of them are going. And we do have scope to do the specky stuff. So we've got the uranium one ripped up. So that's looking juicy as well. So it just depends how aggressive, how involved you want to get.
Preferences,
absolutely. But start with the Australian Small Cap Investigator. That's the introductory way of doing it. And if you want to get a little bit more involved, you can move on up.
Okay, well, great. And obviously you've mentioned the 5 stocks today. We'll maybe get you on the show later in the year to see how they have performed. Maybe a 6 month
if they haven't
review.
done any well, I won't come.
Okay. So if you don't see Callum Newman on the show this year, you know why.
No, they're good ideas. But let's just clarify that everything's risky and volatile. And the best thing to do is join the service if you are interested in the ideas, because you can follow my analysis. And because if something went horribly wrong and I sell it, then obviously you're not going to know. But at the moment, there's some ideas to follow up for everybody.
Awesome. Well, Callum, thank you very much, and hopefully see you soon.
Absolutely.
See you later.
Yeah.